Welcome folks, how are you all? I believe everyone is okay. So this is going to be the weekly analysis, and I promise you if you watch from the beginning to the end, you will learn a lot from this video. It can be a little longer, but I promise you will learn a lot from here. At the same time, if you are new, please subscribe to my channel and don't forget to give me a thumbs up. Let's start the video. Here you have to start with your calendar, because if you see the calendar you will have an idea where and how this market will work. Will be there any volatility or not? Everything will be clear from your calendar. So you can see in Monday we have some red folder news, which is PMI. In Monday actually we expect consolidation or the choppiness, because that is the accumulation day. When we have this PMI news, I'm little confused about Monday now. I believe that we are not going to get any kind of volatility over there. Instead of that, it will be seek and destroy mode in Monday. So be very careful in Monday. And if you can get a obvious setup, go for that. Otherwise, skip trading in Monday. Then we have Tuesday. A red folder news. This folder news, this news is not that much important. We will see how we can trade in Tuesday, not important for me. And then Wednesday we have non-farm payroll, and we have PMI around 10 a.m. I believe that in Wednesday we will get better price action comparing with Monday and Tuesday. So for me, Wednesday is the best place to trade. Thursday we have unemployment claims around 8:30. It is also a good day to trade, I believe. And finally, the Friday 8:30 we have non-farm payroll around 8:30. Now the non-farm payroll week is really tough to trade overall. Okay, it's really so tough to trade. If you see the non-farm payroll in that week, the best option is not to trade. If you would love to trade, you should trade until the Wednesday AM session. So from Wednesday PM session to until Friday 8:30 AM, you should not place a trade on your chart, okay, on your account. So don't trade around that area. Try to frame your trade after 8:30 AM in Friday. So Wednesday morning will be your last trade, and the next trade will be after 8:30 AM in Friday. So overall, this is the calendar, and I have already told you about my expectation. At the same time, I would love to say you that this week analysis will be my prediction. So don't take it seriously, or don't take it as a confirmation. Do your own analysis. Okay. Let's go with the dollar index. Here is my dollar index weekly chart. I don't want to go to monthly chart. Should I go for the monthly chart? Yeah, I should go for the monthly chart at the beginning of the month, but there is very nice choppiness or the sideways in monthly chart, so I don't think so it's gonna be important to explain anything from the monthly chart. Instead of that, I can start my analysis from weekly chart. You can see from the weekly chart, this was relatively equal highs which has taken by that run. Okay, so when market has taken the buy sell liquidity, then this is the entry fair value gap, this is the last fair value gap. This entry fair value gap worked as the inversion fair value gap. If you have watched my last video, which is ICT algorithmic price run, you have already known about this thing, this fair value gap. If you didn't watch that one, I will put the link at the end of this video to the end screen. Please watch that video. It will be benefited. You will be benefited by that video. Okay. So this this fair value gap is extremely important for me. You can see price came until this constant crossment, went through this constant crossment. I will show you why market go through this constant crossment. Okay, I will show you that. Just keep waiting. And whatever I'm telling you here, if you didn't watch my last video, you won't understand anything from here. That's for sure. Then market come back again until that constant crossment. Then it started to fall. So I'm actually bearish from the weekly chart. I'm looking for the bearishness for the next week, and I'm expecting market will go below these lows and it will work with this fair value gap here, this fair value gap. If market is overzealous, then it can go through this fair value gap and reach until that low. It is my primarily expectation. Market will go below this lows and it will work with this fair value gap here, this fair value gap. If market is overzealous, then it can go through this fair value gap and reach until that low. It is my primarily expectation. Market will go below this lows and reach until that low. It is my primarily expectation. from the weekly chart. I don't have anything to say over here except this area. Don't forget about this area, why it went above that constant encroachment. Now I'm going in daily chart. Now I'm in daily chart. So from the daily chart, you can see this run has taken the liquidity. Then it went higher. Last fair value gap, entry fair value gap. The same inversion fair value gap. I just marked it, extend it to my right. And you can see market reached until the constant encroachment of that daily inversion fair value gap. So this is the reason why market traded above this fair value gap. Constant encroachment, because it went until the daily fair value gap constant encroachment, then it fall. Okay, so this was the reason for trading higher. After trading this area, market went lower. Here is your last fair value gap. Market come back again until this last fair value gap. See over here where the price reached exactly at the constant encroachment of that daily fair value gap. So I'm seeing that market is respecting the constant encroachment. It didn't work with the upper fair value gap. I have already explained everything, whatever I'm saying you here to my last video. I'm just mentioning that video again and again, because if you missed that on, you won't understand why that is important. So if you have time, please watch that video. Price reached until that constant encroachment to that daily last fair value gap over here. Then market fall. When market fall, see this order block over there is the order block. Market traded that order block. Sorry. Then it fall again. When it fall, it has made relatively equal lows over there. If you don't mark this one, no problem. This low is taken by that low. That is your relatively equal lows, a shallow run, which has made very strong by that run. Okay, so this is my relatively equal lows, and I'm believing that market is going going toward that sell side liquidity. Below here, I have more sell side liquidity around that area, so I'm believing that market is going toward that sell side liquidity. If market has enough speed, then it can reach until that last sell side liquidity. Otherwise, I will see how market react from this fair value gap. So until this fair value gap, I'm extremely bearish, and after this fair value gap, I'll be bearish until this sell side liquidity. Now here I would love to explain something again. Now this is for the next week, and I would love to show you something from here. Okay, this is not for the next week. Here, this is the weekly chart, and this is the monthly chart, and you can see this is the monthly fair value gap. So price reached to this monthly fair value gap, constant encroachment, went higher to that area, to that week and monthly bearish fair value gap over there. Okay, this one from weekly chart. So let me remove it from my monthly chart. So it reached until that monthly bearish fair value gap. It is sideways. So just remember, this is the monthly bullish fair value gap. Now I am in weekly chart. In weekly chart, you can see this is relatively equal lows. This run has taken this relatively equal lows. Then market went higher. Here is your, the same fair value gap I marked here. This is that same fair value gap over there. If you mark that fair value gap from here to here, you can see market reached from this inversion fair value gap until here. Why market worked with the below of this constant encroachment of that inversion fair value gap? Because market reached until this weekly last fair value gap. And let me show you here, weekly last fair value gap. This two blue line is the weekly last fair value gap. I don't want to mark this one. Instead of that, I would love to keep the last fair value gap from weekly chart. Now I am going to daily chart. Now I am in daily chart. When I am in daily chart, that fair value gap, see from that inversion fair value gap, I have just marked that inversion fair value gap because it has taken this relatively equal lows, and that inversion entry fair value gap, market reached around that area. Perfectly it reached to this fair value gap, then went higher. When market reached around that area, it went through this constant encroachment of the daily inversion fair value gap. As I say, this is the fake breakout. Now I have find out that the fake breakout happened when market would love to reach until the last fair value gap. In that type of situation, this fake breakout happened. So here, this is the last daily fair value gap. You say this is the last daily fair value gap. There is no other fair value gap below this fair value gap. This was your weekly last parallel gap, these two blue line. But here, this is your daily last parallel gap. Price reach until the constant enforcement of this last daily parallel gap. Reversed from there, how many things do you have over here? Monthly parallel gap, weekly parallel gap, last parallel gap, daily inversion parallel gap, daily last parallel gap. See how many PD array over here. Every single one hold the price, send it back for the buy side liquidity. Then when market came here, same thing happened again. The weekly fair value gap, the inversion fair value gap, daily last fair value gap, hold the price, send it back. Now I am expecting market will fall and it will take this sell side liquidity, then it will reach until this fair value gap. If this fair value gap is broken, then I'll be bearish until this sell side liquidity. Market can take that sell side liquidity next week. Obviously, it can take the sell side liquidity next week, but this week, this parallel gap is my target. How can I know that market is going higher? If market starts to go high and go through this order block min threshold, then I will start to think that market is going higher. In that type of situation, maybe I will miss a lot of trade. Okay, a lot of trade I will miss because that is not my expectation. I really don't want to see that. Instead of that, I really would love to see market will keep falling at least until this fair value gap. So this fair value gap is my primary target, and when it will reach over there, I'll be done with my weekly bias. Let's go to hourly chart now. So from hourly chart, there is exactly, I don't have anything very important over here from the hourly chart. You can see market has made this relatively equal lows and relatively equal highs over there. Then here we have the relatively equal highs, we have relatively equal lows. In non-farm payroll week, market actually make relatively equal highs and the relatively equal lows. After making both relatively equal highs and lows, market play in non-farm payroll a very nice game. So keep that in your mind. Market can leave the liquidity for the non-farm payroll Friday 8:30, and until then market can keep making the liquidity. Just keep that in your mind. Let's go to Nasdaq. So here is Nasdaq weekly chart. Just a second. This is the Nasdaq weekly chart. Okay. Now in Nasdaq chart, you can see this down close candle. Okay, this consecutive down close candle. It reached until this parallel gap over here. This parallel gap. Then market went higher, and how it closed. This is the last up close candle, up close body close candle, which has closed above the candles. Okay, so if you mark this high, this candle is closed above that high. If you mark this one, and this one, every single highs is closed by that candle. So when this candle closed, I started to look for my order block. In that type of situation, I saw that the highest candle to that consecutive order block, market closed above that highest candle. So the opening of that highest consecutive candle is my order block level. So here, this is my order block level. At the same time, it's cool. Okay, I don't need to explain the other thing, whatever, just let it go. Over here, this is the order block. So from the weekly chart, market reached to the order block. Now it should keep going higher. Where? For the all-time high. Okay, I don't need to mark the buy side liquidity over here, because as it is all-time high, it can reach as far as it wants. So I'm bullish for from the weekly chart for Nasdaq. Here I don't have anything to talk about because I don't see anything important over here. But all I would love to add is, if market keep going lower, then it has to close, from below this parallel gap from the weekly chart, and in that type of situation the week will be end. So here I don't have anything else to say except this order block will hold the price and send it back for the all-time high again. Let's go to daily chart. So here is my daily chart. Remember, this is that weekly order block. Don't forget about that weekly order block. And that area from daily chart, what do you see? This is that weekly fair value gap. Market reached to that weekly fair value gap. At the same time, when it went lower, it has taken relatively equal lows. See, this relatively equal lows has taken over here. Then market has made a swing high, went lower, gave me the market structure shift over here. This is the market structure shift. This is the entry fair value gap. This is the last fair value gap. Price tap to this entry fair value gap, went higher. When price tap to this entry fair value gap, where is your down close candle? There is your down close candle, and this is my order block. So if you have already watched my order block video, you will have no confusion how you should mark the order block. I believe so. Please watch that video for your better understanding. I mark the high and the open for my order block level. Here, if I mark the order block high, and you see this candle came until that order block perfectly, exactly until that order block, then went higher, closed at the level of the weekly order block. Okay, now I'm bullish from weekly chart. I'm also bullish from daily chart as well. But at the same time, I would love to see that market is not going to close below this constant encroachment. That means if really market would love to keep going higher, it should not close below this constant encroachment. Yeah, market can come until that constant encroachment. There is nothing wrong with that. But body has to close at the level of the constant encroachment or above the constant encroachment, because this week has taken all of this relative, these lows, 1, 2, 3, these lows has taken by that week, and this week has traded this parallel gap, also this parallel gap, finally reached until that order block. This week is extremely important for me. The 50% of that week is called the last parallel gap as well. So depending on that analysis, I would love to see that market will stay above the constant encroachment of that week. If market fail to touch the constant encroachment, that is the sign of extremely bullishness. But if market close below the constant encroachment, then I would love to look for this low and that low. They are relatively equal lows. I would love to see that market will take those relatively equal lows. I really don't want to see that. My expectation is market can go little lower, but after reaching little lower, market will go higher for the all-time high one more time. Okay, so that is for your understanding. If you don't understand this one, please watch one more time, because I'm trying my level best to make it easier to understandable. If it is not, watch 1 or 2 times, and if you have any doubts, you can ask me to the comment box. Let's go to hourly chart. Now here is the hourly chart. Now, from the hourly chart, what do you see? Do you have any buy side liquidity? Now, I have some buy side liquidity around that area. See this, all these highs. This can be the buy side liquidity, but I am really not looking for this buy side liquidity. Instead of that, I would love to see the all-time high as my buy side liquidity. Okay, so all-time high is my target, and I'm going to remove this daily 50% of that week. Instead of that, I would love to mark this hourly inversion parabolic gap. Why I have marked that one? Because this parabolic gap has taken all the lows. See, all this relatively equal lows, everything has taken by that run. So this is that entry inversion parabolic gap. This is the last entry inversion parabolic gap. It has worked already over here. So this one is not important for me. Instead of that, I would love to mark this one. So every single time I'm marking this inversion parabolic gap, or I'm just saying this is inversion parabolic gap, but it is not actually the inversion parabolic gap. So don't get confused by that. Just it is working as inversion, so I'm calling it as inversion parabolic gap. So I would love to see that market will keep going higher, but if it would love to go lower, it should not close below the constant encroachment of that inversion parabolic gap. If it closed below the constant encroachment of that hourly parabolic gap, in that type of situation, I will go to 15-minute chart and I will say if there is another inversion parabolic gap from 15-minute chart or not. So here around that area, you can see this is the last inversion parabolic gap from 15-minute chart. So over here around that area, let me mark it for your understanding. So if I see market closed below this constant encroachment and it respect the inversion parabolic gap from 15-minute chart, that means body didn't close below the constant encroachment of that inversion parabolic gap, I will be still bullish and I will expect market will go for the all-time high. So even if market would love to go little lower, there is nothing wrong with that, but it should not close below this 15-minute constant encroachment. Okay, it should not close below the 15-minute constant encroachment, inversion parabolic gap, constant encroachment. The best option or best scenario is market is not going market is not going to close below the constant crossment of that hourly inversion parallel gap. That is the best situation. Now let me show you something else. When market fall dramatically, where did it came exactly? Here, this is the run which has traded this parallel gap. Over here this parallel gap is extremely important. I have marked this one as a order block, but this is not exactly order block. This is called the propulsion block. Okay, so this run has traded this parallel gap around that area. This is the order block. If you just extend it or to your right, this one and also the consecutive order block, both of them are important. But if you just extend it to your right, you will see it worked over there, come back here, then here. This run has taken all the liquidity. At the same time, this consecutive order block has traded by that run. So this is the propulsion block. I marked it as a order block, but this is actually the propulsion block. Okay, so look at that propulsion block opening. So this is the, I marked it order block. Again, this is the propulsion block. Market can reach until this order block. This is that daily order block. Over here, this one is the daily order block. Tick by tick it worked. Bodies didn't close below that order block opening. After reaching here, this is the reaction. Look at the reaction. It has made another bullish parallel gap over here. See this bullish parallel gap? So this bullish parallel gap 50% and this hourly parallel gap, inversion parallel gap 50%. If you just compare both of the 50%, I believe that market will hold. Any of these parallel gaps, constant crossment will hold the price and send it back for the buy side liquidity. Again, guys, this is just my expectation. So don't take it as your analysis. Instead of that, do your own analysis and you can compare it with mine. Okay, I'm trying to make it more simpler. If it is a little complicated, I'm extremely sorry for that. But day by day, it's going to be little complicated. That's true. Here we will see how it reacts. So far I'm bullish. If it went through this level, I will be bearish, and in that type of situation I'll look for relatively equal lows around that area or somewhere here. Then until this parallel gap, I'll be bearish. Okay, otherwise I'm just bullish and I will expect market will make another all-time high this week. So that's all for this video. If it is little longer and the voice is little bad, I'm extremely sorry for that. Otherwise, until the next video, you will study this one, you will learn something from here. I am oversure. So if you're new to my channel, please don't forget to subscribe to my channel. At the same time, don't forget to give me the thumbs up and comment below if you think it's good or bad. Just let me know your true opinion. Okay, so until the next video, cheers guys.